Hartalega Holdings' first quarter FY23 net profit nosedived from the 2.26 billion posted the year before to 88.3 million as top line declined due to lower glove average selling prices and sales volume. Not helping matters were higher energy and labour costs due to the increase in natural gas tariffs and implementation of Malaysia's new minimum wage. Revenue for the quarter plunged 78% year-on-year from 3.9 billion to 845.7 million ringgit. No dividend was proposed for the quarter under review. Looking ahead, Hartalegas says it is cautiously optimistic of the longer-term prospects of the glove sector given the expected continued post-pandemic growth in demand for rubber gloves. In a statement, CEO Kwan Moon Leong said that the company will continue to focus on cost optimization and ramping up automation to enhance operational efficiency and sustainability. He adds that Hartalega has a strong track record spanning more than 3 decades and says it will continue to prudently build capacity and capabilities for the future. The glove maker says several headwinds are expected to remain because of the continuing Russia-Ukraine conflict, as well as the ongoing COVID-19-driven lockdowns taking place in certain major cities in China. Hartalega points out that alongside the higher operating costs, the glove sector is also experiencing escalating market competition, exacerbated by the continued oversupply situation in the global glove industry. Even so, the company says the sector is expected to see a structural step up in demand in the longer term, with increased glove usage in emerging markets that have a low glove consumption base. In addition, increase in demand is also expected, with higher awareness of hygiene and health consciousness among healthcare practitioners post-pandemic. The unemployment rate continued to show a downward trend, recording 3.8% in June, the lowest since the start of the COVID-19 pandemic. According to Minister in the Prime Minister's Department for Economy, Datuk Sri Mustafa Mohamad, the number of unemployed decreased to 630,600 in June from 637,700 people the previous month. Citing the June 2022 Malaysian labour force statistics published by the Department of Statistics Malaysia today, Mustafa said the country had reached full employment since April. This is defined by the Organisation for Economic Cooperation and Development as an unemployment rate of below 4%. Therefore, he says the position of the labour force was more stable following the increase in the number of workers of 0.2% to 16.57 million people, compared with 16.54 million people in May. The labour force participation rate in June remained at 69.5%. Mustafa said some key economic indicators also showed encouraging performance, such as the volume of trade, which increased by 43.4% in June to a new high of 270.4 billion, with exports recording an increase of 38.8% to 146.2 billion ringgit. He said the industrial production index grew 12.1% in June, the highest since May 2021, with all components recording positive growth. In addition, the sales value of the manufacturing sector in June increased by 23.4%, also the highest since May 2021, recording a sales value of 153.5 billion ringgit. Based on this development, Mustafa said he is confident that the national economy will continue to grow this year at the target gross domestic product growth rate of 5.3 to 6.3%. Shares in Hong Leong Bank and Hong Leong Financial Group emerged as top gainers today following a report that Tan Sri Kwek Leng Chan was weighing options for his stake in HLB. Shares in HLB opened 2 cent or 0.1% higher at 20 ringgit 84 before the stock surged to hit a high of 21 ringgit and 4 cent. Despite pairing some gains, the counter still ended the day 0.3% up at 20 ringgit 82. HLFG opened unchanged at 19 ringgit 24 before rising to a high of 19 ringgit 48 in early trade. It closed out Tuesday 0.4% up at 19 ringgit 24 cent. HLFG is controlled by Kwek, Malaysia's second richest man, who also holds a 62% stake in HLB. To recap, Reuters reported on Monday, quoting sources, that Kwek was possibly weighing his options for his stake in HLB, the country's fourth largest lender. The sources said the move by Kwek comes as the bank's shares had risen sharply this year and as he considers succession issues. KLCC Stapled Groups net profit for the second quarter rose by 14.7% year-on-year to 165.2 million as its retail segment did better, driven by lower rental assistance and higher advertising income. Revenue grew by 25% to 350.3 million from 280.2 million ringgit. Suria KLCC and the retail podium of Menara 3 Petronas, which represent the retail segment, saw a 46% increase in revenue to 125.2 million. The group declared interim dividends comprising 0.99 cent for KLCC Property Holdings and 7.01 cent for KLCC REIT, totaling 8 cent per stapled security. This brings its total income distribution to 16 cent for the first half of FY22. As for the first half, net profit improved by 12.6% to 326.6 million, while revenue grew by 19.5% year-on-year to 672 million from 562.5 million previously. Going forward, the group is optimistic about its recovery towards achieving pre-pandemic level performance, saying that Suria KLCC will continue to enhance customer experience, including providing a new online booking platform. As for its hotel, the Mandarin Oriental KL, it anticipates better visibility in the coming quarters with a rebound in tourist arrivals, stronger event calendar and improving MICE activities. However, it warned that rising inflation and increase in raw material costs may impede economic recovery, explaining that lower spending power and cautious consumer sentiment may dampen the back-to-normal trajectory for retail and hospitality. Mobile payment service Apple Pay is now available in Malaysia with 3 supporting banks, namely Maybank, AmBank and Standard Chartered. Malaysia is the second country in Southeast Asia to get Apple Pay after Singapore. The feature went live for Malaysian users today and enables contactless payment with iOS devices such as the iPhone and the Apple Watch. Maybank and Maybank Islamic Mastercard and Visa credit, debit and prepaid cards can be used with Apple Pay in Malaysia and Singapore from August 9th, Maybank announced in a statement, adding that its American Express cards will soon be included in the mobile payment service. Maybank Group CEO for Community Financial Services, Dato' John Chong Eng Chuan, said the Apple Pay service showcases the bank's continued commitment to providing seamless digital payment methods for its customers. Standard Chartered Malaysia's Managing Director and Head of Consumer, Private and Business Banking, Samir, says that they are proud to be one of the first banks in Malaysia to support Apple Pay. He says that it gives the bank the opportunity to be at the forefront of the rapidly growing digital financial ecosystem and supports its ambition to strengthen its local footprint via a digital-first approach. Apple Pay is touted as a safe, secure, private way to pay and authenticate a user's identity with Face ID, Touch ID or device passcode, as well as a one-time unique dynamic security code. To use this service, customers are required to hold their iPhone or Apple Watch near a payment terminal to make a contactless payment and is accepted by grocery stores, pharmacies, restaurants, coffee shops and retail stores, among others.